Good morning, everyone. I'm Karen Lazaro Enriquez. I'm a research analyst of the Macroeconomics, Trade and Investment, or the MTI team here in the Philippines, and I'll be your MC for today. Welcome to the hybrid launch of the World Bank Report, the Philippines Economic Update, Securing a Clean Energy Future. We're excited you could all join us in person here at SEDA, and a warm hello to those participating virtually via Zoom and Facebook. We are privileged to have with us Secretary Raphael Lotilla of the Department of Energy, who will be delivering the keynote address. We also have a panel discussion with a distinguished lineup of experts, followed by an open forum. For those joining us on Zoom, please send in your questions or comments in the chat box or in the comments section if you're joining on Facebook. For everyone's information, the recording of the launch will be available on Facebook at World Bank Philippines and on our website, worldbank.org/ph. Thank you. To formally welcome everyone, let me introduce Dr. Indiame Diop from Senegal, the World Bank Country Director for Brunei, Malaysia, Philippines, and Thailand since July 2020. In this capacity, he leads the bank's high-level strategic dialogue and the institution's financial and technical advisory programs in Brunei, Malaysia, Philippines, and Thailand. Prior to his current role, Dr. Diop was for 4 years the head of the bank's Macroeconomics, Trade and Investment Unit for East Asia and the Pacific region, based in Jakarta and Bangkok. In this role, he oversaw the bank's 30-plus country economists working in East Asia and the Pacific region, and provided advisory and technical support to high-level officials on key macro, fiscal, trade, and growth-enhancing reforms, mainly in Indonesia, Philippines, Thailand, PNG, and the Pacific Island countries. Dr. Diop was also for 4 years the World Bank lead economist for Indonesia. In this role, he led the overall economic policy dialogue, advisory, and development policy lending work in Indonesia. Prior to relocating to Jakarta in 2012, Dr. Diop held lead economist roles for Jordan and Lebanon, country economist roles in the Middle East and North Africa, and was the bank's resident representative for Tunisia in 2007 to 2010. He joined the World Bank in Washington, D.C. as a young professional in 2000. As economist, Dr. Diop has published in peer-reviewed journals and books on fiscal policy and growth, monetary policy and inflation, macro policies and resilience to sudden stops in capital inflows, the impacts of trade liberalization in developing countries, natural resource abundance, Dutch disease, and diversification. Ladies and gentlemen, Dr. Indiame Diop.
Thank you very much. Honorable Raphael Lotilla, Secretary of the Department of Energy. Thank you very much, Secretary, for joining us. His Excellency Franz Melvin, Ambassador of Denmark for the Republic of the Philippines and Palau. Mr. Artemio Panginaban, retired Chief Justice. Very nice to see you, dear friend. To all my partners in development agencies, multilateral financial institution and bilateral institution, and all development partners, to all the other distinguished guests that are here present and online, ladies and gentlemen, very good morning, and thank you very much for joining us today. And on behalf of the World Bank, I'm very pleased to welcome you all to this launch of this edition, the June edition of the Philippines Economic Update. We produce these type of reports twice a year. The previous one was in December, and this one is in June. It focuses on two parts. The first part is on macroeconomic development and outlook. The second part in this edition is on energy transition. So we are very, very privileged to have an authoritative voice here, Secretary Lotilla, who is our guest keynote speaker today on energy transition. And later on, stay tuned for a panel on energy transition. We have very distinguished guests in that panel, and I would like to thank them for joining us today. My colleagues, Ralph and Feng, will make a presentation. The first part will be on macro, the second part will be on energy transition, and that is right after the keynote speech of Secretary Lotilla. Now, since the presentation on macro is mostly on the Philippines, I would like to really just here set the sort of global scene, which is the backdrop against which the Philippines' dynamics or economic outlook can be placed. And I want to do that by going back to December 2022, when we launched the previous economic update. How did we see 2023? And how did you see the outlook back then? At the time, we had three concerns and one glimmer of hope. The first concern was that inflation was way too high and rising. That was a concern because inflation, as you all know, is bad for growth, it's bad for food security, and it's bad for poverty reduction efforts. The second concern we had was that interest rates were high and rising. Rising interest rate was seen as a necessity to reduce inflation, but we were all worried about the side effects and the damage it will do to growth and to jobs. The third concern was that the US and the euro area were predicted to really slow down very, very sharply. Some analysts actually even talked about recession. But the growth rate predicted at the time for the US and the euro area was so low that any shock of even moderate amplitude could really tilt the global economy to recession. Indeed, that was the concern at the time. And the only glimmer of hope, I would say, that we had at the time was China. And sure enough, in early 2023, China announced a change in its COVID policy. And if you remember, in 2022, China had the worst growth year in more than 30 years. Growth collapsed from 8.4% in 2021 to only 3% in 2022. For all the people born perhaps in the 90s, they have never seen such a low growth for China. So that was a real concern. And the fact that China would reopen the economy was really a big hope that something will happen to sort of offset some of the headwinds we were seeing in the other areas. And indeed, sure enough, China will certainly grow much, much higher than it did in 2022, even if the sort of latest data we saw in May are showing some reduced momentum. But overall, we expect China to grow fast. Now, fast forward to today. So what do we see? We really see three good news, but I would say qualified good news. The first good news is that commodity prices have declined from their heights over the last 4 or 5 months. Oil price has declined, and agricultural prices have declined, and this is good news for inflation, for headline inflation. Now, I said qualified good news because, as you know, oil price and agricultural prices are very sensitive to news. They're sensitive to decisions of the OPEC, for example, in the case of the energy price. Energy price is also sensitive to geopolitical tension. Energy prices are also very sensitive to maybe decisions around what is happening in Ukraine and Russia's decision in terms of energy policy. So we need to temper our enthusiasm. We don't know how long the decline in the energy and oil price will last. On the agricultural side, although we're seeing a decline in price over the last several months, which is really great news, we're not sure how durable that will be. In fact, there is now a concern that El Nino may, in fact, really strike And that would be bad news because that would affect agricultural production and could arrest this trend decline we're seeing on agricultural price. So that's the good news. The second one is related to the US and the Euro area. In fact, they ended up growing much faster or moderating less than we expected. And this is partly driven by a beginning of decline in inflation, although interest rates remain quite high. So that's the second good news. And then thirdly, China. China, in fact, is doing much better than in 2022, as I mentioned. And if you add those three good news together, and you look at what happened in the Philippines in the first quarter growth, which was very strong, actually, 6.4%, and you look at the 5 months of data that we have so far, the World Bank felt obliged to really upgrade the growth rate for the Philippines from 5.6% to 6%. And my colleague, Ralph, will elaborate on that. Now, unfortunately, this is not time for complacency. And this is because there are some bad news and what I would call some puzzling news. The bad news is that interest rate has remained and remains quite high. And this is high because if you look at core inflation, which central banks monitor and use to really devise their tightening policy, their monetary policy, core inflation has hardly declined in many countries. It seems to be declining everywhere, and in the Philippines, in fact, it has been declining slightly over the last 2 months. But globally, core inflation is sticky. And core inflation is a key variable. It is the inflation that you see once you take out from the calculation of inflation the effect of food price and energy price that are volatile. And that can reflect temporary and seasonal factors. So core inflation is really the best representation of underlying inflation pressures in the economy. So therefore, as long as it is not declining fast, we cannot expect interest rate to be reduced to a significant way in central banks around the world. Now, what the Fed will do will be really important. Today, the interest rate at the Fed, the policy rate is around 5.25%, which is very, very high. And that is really having some impact on emerging market economies. For one, when the interest rate is that high in the US, the aggregate stock or flow of portfolio to emerging market economy is reduced, because much of the fund managers would rather place their hot money in the US on safe assets. 5.25% is not bad, especially when just 2 years ago you would place your asset to the US on short-term papers, you would get 0.5% if you're lucky. Now it's 5.25%. So this is really driving aggregate capital to the US, right? It doesn't mean that flows will not come to countries, but in the aggregate, we will see less portfolio flows going to countries. Now, the second issue with that is that as long as the interest rate in the US is high, it will really, really constrain monetary policy in emerging market economies. Because even if you have reasons to reduce your interest rate in a country, for example, like the Philippines, for example, if the trend decline we're seeing in the core inflation continues, you will always wonder what reducing your rate will do to capital flows. So therefore, you will actually calculate and look at what the US is doing in your own decision, monetary policy decision, because you don't want to reduce the rate and then increase the gap between the country and the US and then drive capital to the US. And when that happens, it will weaken the currency. So therefore, the task of monetary policy makers is absolutely difficult. Now, there are also puzzling news. And I've been challenging my team to sort of give me some explanation of some things that are really puzzling to a macroeconomist like me. One of them is the relationship between interest rate and the labor market. If you look at the US, for example, the US Fed has increased the policy rate 10 times in 14 months. As I mentioned, from close to 0 to 5.25% in about 14 months. And yet, the labor market is overheating in the US. The unemployment rate is at 50 years low in the US. Normally, in normal time, what we have seen historically is that when you increase the interest rate that high, it will lead to a really high increase in unemployment rate, and that is the mechanism actually by which you reduce inflation. It's not happening yet. And if you look at that relationship, it's a puzzling relationship in many other countries, even in the Philippines, right? Because the labor market is doing very, very well, even though interest rate has increased quite significantly. I think we need to do a little bit more research to understand what is happening this time around. But in any case, it illustrates the capacity of the economies to absorb high interest rate, both in the US, but also in the Philippines, because as Ralph will show later, you will see that loan growth in the Philippines is increasing, double-digit growth, in the context where interest rates have increased. So I've been asking my team to look into that for more explanation. But those are things that are happening in the global economy. Now, in total, what the bad news of high interest rates still, and the puzzling news of interest rate not very clear that it will go down very soon because of its impact on the labor market and the economy. If you put those things together, it really, really calls for prudence for the rest of the 2023 year. It's not very clear how soon interest rate will decline. It will depend on how fast or how continuous the core inflation decline will play out. So we know that the impact of interest rate on investment and consumption is delayed. There's a lag of, all the way to 6 months between when you increase the interest rate and when it is materializing in the economy. So we need to be very prudent. But so far, many economies are displaying a remarkable resilience to higher interest rate. So I will stop here because we have a very packed program today. I will not venture into energy transition because we have many speakers today, starting with Secretary Lotilla in 1 minute, and we very much look forward to the panel. Thank you very much again for your kind attention.
Thank you, Indiame. For our keynote address, it is my pleasure to introduce the Secretary of the Department of Energy, the Honorable Raphael Lotilla. Secretary Lotilla has served the government for over 2 decades. He was appointed Undersecretary of the National Economic and Development Authority from 1996 to January 2004. He was also the President and CEO of the Power Sector Assets and Liabilities Management. Ladies and gentlemen, please join me in welcoming the Honorable Secretary Raphael Lotilla of the Department of Energy.
Thank you very much. World Bank Country Director Njame Diop, Your Excellencies from the Diplomatic Corps, my Legal Law and Energy Advisory Panel member Retired Chief Justice Panganiban, friends, ladies and gentlemen, good morning. The department, on behalf of the Department of Energy, we welcome the launch of the Philippines Economic Update that will provide a fundamental perspective to energy investors in the country. I haven't read the report yet, and so I cannot give you my feedback or reaction to it now. But I want to thank the World Bank for the focus on energy transition at this forum, highlighting the Philippines' 50% renewable energy share in the energy mix by 2040. But in this energy transition, I want to emphasize a number of things. First, that our focus remains on Sustainable Development Goal number 1, which is the reduction of poverty and increasing the access of our people to energy. And right now, the energy poverty, electrification of the country stands roughly at 96% at the end of 2022. But that, therefore, leaves almost 1 million households, or at least 5 million people without access to clean energy. Undersecretary Guevara later will be focusing on a number of things relating to the energy transition. But I just would like to emphasize a number of things. That in our desire to transition to cleaner sources of power, we need a number of things. And one of them that I want to emphasize is the need for transmission. If one takes a look at the Philippine Development Plan of the administration of President Ferdinand Marcos Jr., the emphasis is on transmission infrastructure in relation to clean energy is clear. The government will facilitate the upgrading and modernization of the transmission and distribution lines to support efficient transition to cleaner energy. And the government will also resolve to address transmission congestion, whether by adding transmission lines or avoiding subsidies that cause the buildup of excess capacity. The tragedy of Negros Island, where you have 80 megawatts of stranded power, is one that we do not wish to be replicated in the rest of the country, and it has been in that state for 5 to 10 years now. The other important element in the Philippine Development Plan is that once the government has fiscal space, the government will revisit and reevaluate financing investment in transmission. And Congressman Salceda hears that message very well. Financing in investment will be separated from the regulatory structure of transmission tariffs. And investment in transmission expansion offers enormous potential benefits for efficiency by increasing access to low-cost generation, improving reliability, and mitigating or counterbalancing market power. Now, how do we go about realizing these objectives? Well, there are a number of things that I wish to underline. That the fiscal space is still not to come, but should start now. Right, Congressman Salceda? So, the time for investing in transmission is now, and this is an ongoing conversation that we have with the World Bank and with the Asian Development Bank, and I hope that they will catch up with us in terms of that's right, in Jammer, right? So I'm not being too hard on you, but I pose the challenge for our development partners, therefore, to to be up to speed in delivering delivering the needed transmission capabilities. There are a number of things that favor this. One is that, as Secretary Jokno has emphasized with the President, is that the 5% of GDP for infrastructure is a floor, not a ceiling. And you have not yet seen in the priority projects the energy priority projects, including transmission. The other point is that while we are doing the build-up of infrastructure in other sectors, we see synergies with the energy sector. So the potential for building bridges, whether it's across Manila Bay, Guimaras, Negros, Panay, and Pangil Bay, these are opportunities for building new transmission lines along with the rights of way that are going to be that have been identified for the new BOT and PPP projects of the Department of Public Works and Highways. So we see synergies here. We can lower actually the infrastructure costs by building up in parallel the transmission lines as well as the tollways that are going to be built. And of course, we also look forward to the upgrading and completion with adequate funding from our development partners of the backbone in the major islands. I'm not only talking about the completion of the power infrastructure in Palawan and Mindoro, but in islands like Marinduque, Masbate, Catanduanes, Siquijor, Guimaras, Basilan, Jolo, and Tawi-Tawi. These are huge islands which do not have complete backbones at this time. And we have to build them there if we are to realize the fuller electrification of this country. So I go back again to my challenge to World Bank and our other development partners, that the green transition or the climate transition or the securing a clean energy future must be a just and fair transition. And that means that transition financing or climate financing, or call it by any other name, such financing should be available to the country. And I have stressed again and again that in the case of the Philippines, with reform its power industry 20 years ago by privatization and by unbundling, unfortunately, we are not part of any of the just energy transition partnerships that have already been put in place. So in order to avoid any accusations of perverse incentives that those who have remained centralized, government-owned, and not market-driven should be the ones to receive the support of the international community, I challenge the brain trusts that we have in the room to develop precisely alternatives that are meaningful for those who have undertaken that particular reform a decade or a generation ago. And I feel strongly about this because I saw when I had to implement the IPIRA provisions and saw the increase of the value-added tax from 0 to 12% in the course of 1 year, I saw the impact on our people. And that I don't want to be repeated. I want us to be rewarded precisely for the sacrifices that our people had to go through. So the message, I think, is clear. And I repeat this because, and I challenge particularly World Bank, because I know that they have enough brains in the institution and as well as among our development partners to put to work in order to provide solutions for this great challenge. And I recall now that a quarter of a century ago, when I freshly joined NEDA, I was invited by World Bank actually to join an executive course for the middle level executives. So I went down to Boston, and that's how I saw the quality of the thinking that was there. And I hope that that will be fully harnessed. Among those who was in that cohort was a lady named Kristalina Georgieva, who happens now to be IMF Managing Director. And so if Injami gets to get a higher international position, don't get surprised. So thank you, ladies and gentlemen, and we look forward to a fruitful discussion this morning.
Thank you, Secretary Lotilla, for your inspiring message. Let's move on to the presentation of the highlights of the report. Part 1 will focus on the recent developments and outlook for the Philippine economy, to be delivered by Ralph Van Doorn. Ralph is one of the bank's senior economists in the macroeconomics, trade and investment global practice, and his work focuses on macroeconomic policy, fiscal policy, and debt management. Previously, he was the country economist for Indonesia, Sri Lanka, Maldives, and Mongolia, and supported governments on fiscal, growth, and debt issues in countries across Africa, East Asia, Central Asia, and Eastern Europe. He holds a Master of Research degree in Economics from the London School of Economics and a Master of Science degree in Applied Physics from Delft University of Technology. Friends, please welcome Ralph Van Doorn.
Magandang umaga po sa inyong lahat. Maraming salamat po sa inyong pagdalo. So thank you very much for coming. Thank you also for the challenging and kind words by the Secretary of Energy about, the job that the World Bank should do. And hopefully we can do that to satisfaction. So welcome to the presentation of the Philippines Economic Update, June 23 edition. So we'll start by looking at the economic analysis and outlook and policy recommendations, after which our colleague Feng will discuss on securing a clean energy future. So the key messages of the report, let's start with those. So the economy outperformed its regional peers, growing by 6.4% in the first quarter of 23. A second is, despite weak external conditions, strong domestic demand will drive growth this year. And the third is managing inflation, pursuing revenue-enhancing policies, public spending efficiency, promoting investments, and pursuing a clean energy transition are key drivers to safeguard growth and achieve the long-term development goals of the country. So now let's unpack these three key messages one by one, starting with the recent economic and policy developments. What we see is that the economy grew at 6.4% in the first quarter, which is higher than the growth in many peer countries in the region, for example, faster Malaysia, Indonesia, Vietnam, and Thailand. Now, if you look at the chart on the left, in the orange bar, you can see that growth was driven really by domestic demand, household consumption, followed by investment. And this was driven by the continued release of pent-up demand, improved employment, steady remittances. And this was all despite the fact that we have high inflation, rising interest rates, and that's the mystery that Ndiame spoke about. We don't have the answer yet. And weak external demand and weight on exports. If you look at the chart on the right, the service sector fueled growth, as you can see in the orange bar, underpinned by the revival of tourism and consumer spending on domestic services. We see that the industry sector was weaker due to weaker global demand, which weighed on manufacturing and mining. We also see that favorable weather conditions in agriculture led and a rebound in livestock production led to better performance in this sector. Now, if we look at the next slide on inflation, we see that the good news is that headline inflation has peaked in early 23. Although it remains well above inflation in peer countries in the ASEAN region, while we also see that core inflation is still, kind of close to stabilizing. Now, headline inflation was driven by high food and utilities inflation, while transportation inflation has peaked earlier in 22, as global crude prices have started to lower. But as Ndiame said, the core inflation is still very high. It was 7.9% in April, and I think 2 days ago it was announced that it lowered to 7.8% in May. So this is good news, and this is really worth tracking, because this is really a leading indicator of what's of the underlying economy. Now, to combat high inflation, the central bank or the government lowered the tariffs on key agricultural commodities and approved a cash transfer program for, to mitigate the impact of inflation on the poor. And also, the central bank increased the policy rate by 75 basis points since early 23, on the back of possible second round effects. And we see that it seems as if these policy rates, which do have a lagged impact, the central bank estimates that it takes about 5 quarters for monetary policy decisions to impact the economy. So it seems as if it's having an impact finally. Now let's go to the next slide and look at the fiscal policy. So at the external sector. So we see that the current account deficit was 4.4% of GDP in 2022, which is really a record high. And the reason was we saw strong domestic demand, which in the Philippines, through investment, often translates into a surge in imports. And that was then kind of exacerbated by very high commodity prices. At the same time, we saw that this growth in imports was not outpaced the growth in exports. At the same time, though, we see that services trade has expanded thanks to the recovery of tourism and the resilience of the IT BPO sector, while remittance growth softened. Now, this current account deficit was financed primarily by portfolio inflows, while foreign direct investment was about 2.3% of GDP in 22. And we see that this led to a balance of payment deficit and the weakening of the peso last year. But we see that in early 23, this has rebounded. Higher remittances and higher bond issuance by the government and other portfolio investments have supported the peso's rebound in early 23. Now, let's look at the fiscal side on the next slide. So we see that it seems that the government's fiscal consolidation program is on track. The fiscal deficit peaked in 2021 and ended up at 7.3% in 22. And we see that in 23, in the first quarter, the fiscal deficit was only 4.8%. Now that's cyclical, and we don't expect it to remain 4.8%. It will widen again over the full year. But you can see it's lower than the deficit in the first quarter in 22. This despite the fact that actually revenue fell in the first quarter, which has to do with slower growth and the timing of VAT payments, which changed. But that's a temporary effect, we believe. We also see that expenditure fell because of lower current expenditure and the fact that the transfers to subnational lower local government units were lower due to the lagged effect of lower revenue 3 years ago. Now, this lower deficit also helped then temper the growth of public debt, which you can see is starting to stabilize after a strong surge from 2019 to 2020. And it's about 61% of GDP, mostly pesos. Now, it seems as if this financing of the deficit is still supported by the very high liquidity that is there in the financial market. So let's look at the next slide, to the financial sector. So we see here that the financial sector is recovering. We see that the non-performing loans in the bars on the left They are falling to about 3.3%. And we see that the restructured loans, as a share of total loans, are also falling. And we also see that the non-performing loans coverage has increased to 105%, which means there are very strong buffers in the banking sector to deal with non-performing loans. And we also see the bank profitability has shown considerable improvement back to pre-pandemic levels. Loan growth has picked up again. It's in double digits, a bit stable the last few months, driven primarily by loans to households, but also followed by loans to business. And we still see fairly high liquidity in the financial sector, supporting both financing of the fiscal deficit and loan growth, but that over time, as recovery continues, that liquidity will fall. Now let's go to the next slide to look at the outlook, our World Bank outlook on the economy and the risks. So we revised our growth outlook for 2023 upwards from 5.6% half a year ago to 6% now. And as Ndiame explained, this really has to do with the fact that the global economy has not performed as badly as was expected, with good news or relatively not bad news coming out of the United States and the euro area, and a surprisingly fast reopening of China. At the same time, the domestic economy, the Philippines economy, has performed really well in the first quarter. So all of this gives us underpins the expectation of 6% growth. We expect it will be driven by private consumption, as inflation is expected to decline, and a better consumer sentiment, improved employment, although it may be weighed down slightly by the winding down of pent-up demand. Investment growth is expected to soften, both because of the consolidation, fiscal consolidation, and its impact on public investment, and also the tightening financial conditions which may weigh on private investment. But we do believe that in the medium term, the pro-investment reforms that the government passed, and hopefully is going to be implementing speedily, will encourage more private investment and attract more foreign direct investment. Now, if we go then to the next slide, we can look at the poverty and labor market impact. So, that slide, yes. So now, this macroeconomic developments, they are positive also for poverty reduction, which is why the World Bank is here. Although we still see mixed messages coming out of the labor market. So while we see that unemployment is now at a record low, 4.7%, and underemployment is falling, and labor force participation is high at 66%, driven by female labor force participation. We also see that the quality of jobs has been declining, and although 1 million jobs were created between September 22 and March 23, a lot of them were in agriculture and services. And this reflects a problem of inclusive growth in the Philippines, as something that we are all studying and trying to understand, and trying to support policies to help improve it. There's a very high share of elementary occupations associated with low and irregular pay in the economy. And the share of part-time workers, self-employed workers, and unpaid workers is now above pre-pandemic levels, which indicates a growth in the informal labor market and a shift to low productivity jobs. And this really is a big agenda. Now, with the economy, if we zoom back to the impact of poverty, though, the economy is regaining momentum, and these jobs, although lower quality, are expected to spur household income growth, and the poverty is expected to decline over the forecast horizon. And using the World Bank's own, the international poverty line, which is $3.65 per day, which is the lower middle income country poverty line, we expect that poverty will fall from 17.8% in 21 to 13.5% by 23 and 10.5% by 2025. It should be noted, though, that still means that a lot of poor households are just above this poverty line, and they are at risk of one single shock can push them back, and that's what we saw during the pandemic. So still, we need more poverty reduction and people moving faster, further away from this low-income country poverty line. Now, if we look then to the risks on the next slide, we have downside risks coming from both the international and domestic environments. On the international side, we see there's always a possibility of higher than expected inflation, tighter global financial conditions, and the escalation of geopolitical tensions. And this could disrupt global activity and cause a sharper than expected global slowdown. Now, sticky core inflation is also still a risk due to tight labor markets in other countries. And this could lead to faster than anticipated monetary tightening. On the domestic side, we see that the threat of El Nino supply chain bottlenecks may raise food supply challenges and place upward pressure on food prices. So given all this, what then do we recommend for the Philippines? So let's look at policy recommendations. We have grouped them here into 5 major recommendations. So the main near-term challenge remains addressing high inflation. And this means employing both monetary policy, but also non-monetary policy measures. For example, lowering tariffs and non-tariff measures on imported food items. We also recommend the central bank for being vigilant about inflation and being very responsive to it. Over the longer term, it's important to look at more structural measures and multi-sectoral measures to manage inflation and address food security. And this is all discussed in the report. But basically, we recommend that the agri-food system should become more climate resilient. It should become more inclusive in terms of productivity of households, more competitive, and more environmentally sustainable from the farm to the fork. In addition, we recommend investing in climate change adaptation and mitigation measures to minimize the impact of climate change. And we talk about this extensively in the report. But achieving these objectives means looking beyond the agricultural sector and also focusing on infrastructure, logistics, and natural resource management. Second, we recommend continuing pursuing revenue-enhancing policies to enhance the quality of the fiscal consolidation and make sure that it can be pro-growth and pro-poor. And this means carefully considering the right type of fiscal policies, especially tax policies, to keep them growth-friendly, and also good communication, very important for public acceptance of these measures. The third one is improving public spending efficiency, and we focus primarily here on better targeting of social protection to protect the poor while the government has limited fiscal space. And we saw that during the pandemic, the government was able to rapidly scale up social protection, although it was hindered by implementation challenges and delays. But we make a lot of recommendations to improve the delivery of social protection in our report, and we encourage you to take a look at it. Fourth, strengthening the recovery also means attracting more investment. And that means returning to the pre-pandemic levels of investment, which would be great. But that pre-pandemic levels of investment, although there was record high for the Philippines, it was still below a lot of fellow countries in ASEAN. So there's still a long way to go for the Philippines to improve and increase investment, especially private investment. We therefore recommend the government to really focus on implementing the recently approved investment reforms, and in particular Public Service Act amendment reforms will be essential. And then finally, the energy transition towards a low and zero carbon alternatives will address the energy demand to the poor. A cleaner energy future has many benefits. It is expected to lead to more affordable energy, given that there's a global trend towards declining the cost of deploying an integrated renewable power. It's expected to enhance the competitiveness of the economy. But also the shift would reduce ambient air pollution and have important benefits for public health. So a lot of short-term and long-term reasons to focus on energy transition. And that's, of course, why part 3 of this report and this event is focused really on securing the clean energy transition. So let's finally close the session by looking again at the 3 major messages. We saw that the economy has outperformed its peers, which is great news. We also saw that despite the weaker global conditions, we see that domestic demand is really driving the growth of the economy this year. And then finally, we recommend focusing on inflation, fiscal policy, promoting investment, and pursuing a clean energy transition are key drivers to safeguard growth and achieve the long-term development goals. So with this, I would like to say, next slide, we're just showing you the report is available at worldbank.org/PEU, and also the global economic prospects that Ndiame mentioned is available at worldbank.org/GEP. So with that, I would like to say maraming salamat po sa inyong lahat, and I would like to hand the floor back to Karen. Thank you very much.
Thank you, Ralph, for your presentation. I would now like to introduce our second presenter, who will discuss the energy transition in the Philippines. Feng Liu is the World Bank Program Leader for Infrastructure in the Philippines and a Senior Energy Specialist leading the country's engagement in the sector. He also coordinates activities in the transport sector and digital development. Over the past 20 years, he has worked on energy projects in more than a dozen countries in Asia, Europe, and Latin America. Friends, please welcome Feng Liu.
Thank you very much. So with this presentation, I will highlight the main findings and recommendations detailed in Chapter 3 of the PEU and provide some background materials for the panel discussion. And thank you, Secretary Lotilla, for that exciting keynote address and the challenges you raised to the World Bank and other development partners. Without the permission of my country director, I would say we are ready to work with the government to address those challenges. The Philippine energy sector is actually quite unique compared to its regional peers, such as Vietnam and Indonesia. But, they face the same common challenges going forward in terms of energy transition. When we frame the discussion on energy transition in the Philippines, like Secretary Popo already said, it's very important to keep in mind the sectoral context. Next, yeah. I think the first and foremost important thing to keep in mind is that, where Philippines is and where it needs to go in order to achieve the country's aspiration to eliminate poverty and become a prosperous middle-class country by 2040. So that is super critical. As we can see from these charts of comparison, of the basic metrics in terms of energy and development, Philippines is lagging dramatically, I would say, behind the OECD countries, and has a very small carbon footprint now in terms of per capita carbon emissions. So the bottom line really is that Philippines needs to increase its energy consumption very substantially going forward. Next. According to the government's current energy plan, the primary energy supply will need to almost triple by 2040 compared to 2020. As you can see, even with that kind of increase, the Philippines is still going to be lagging far behind its regional peers in terms of energy consumption by 2040. As you can see, even with the government's baseline energy scenario, the per capita energy consumption in the Philippines by 2040 is still going to be far lower than the level of consumption in Malaysia and Singapore today. So keep that in mind. So the main issue of energy transition, of course, is what kind of energy Philippines needs to fuel its future growth. Next. The Philippine sector today, has two main risks and other advantages we're talking about here. First of all, it's very heavily depending on imports in oil, in coal, and very soon likely in liquefied natural gas. The other thing to keep in mind is that the Philippines has among the highest energy prices in the region, and that is a major concern for the country's economic competitiveness and, of course, the affordability issue we have been talking about. But on the brighter side, the Philippines also is not saddled with explicit energy subsidies like in some other countries in the region, for example, in Indonesia. That really opens up the physical space for the government to address other priority development issues, such as health and education. So this is very important. And the second advantage for the Philippines is that many other countries in this region is trying very hard to mobilize, attract private financing for energy transition. But in the Philippines, you already have a track record in the past 10 years of almost completely relying on private financing to deliver the energy sector growth. So that is a key advantage as well. Lastly, but not least, the abundance of renewable energy in the Philippines, particularly in solar and wind, is going to be a major advantage for you to address the two risks we mentioned here. Next. The government has already recognized the importance and opportunities of a clean energy transition and already put in place a sound strategy, as we can see here. And also the policies and regulations to achieve the renewable energy goals for 2030 and 2040. So that is a good thing. We think realizing these goals is going to go a long way towards transforming the power sector towards a renewable energy dominated future. But what the government committed in its energy plan is commendable. So our policy and analytical question really is, could the Philippines adopt a more ambitious energy transition agenda than what the government has already planned for? So that is basically the discussion that we're going to have today. So the answer to that, of course, is really dependent on what implications for the technologies and energy resources this higher ambition will bring, and what are the implications of the costs, benefits, and financing and implementation. Answering those questions, I think it's important, for the discussion about energy transition, particularly on the magnitude and pace of changes which is needed to take place, and also the areas where the Philippines will need the help from the development partners. Next. So what we did in this analysis is to really contrast the current government energy scenario, which is the Energy Plan 2020-2040, for the baseline scenario and also the clean energy scenario. So that is the number one and number two scenarios, which is already elaborated in the energy plan to a accelerate decarbonization scenario. So in that, we basically are analyzing how the power sector need to adapt to a much higher goal of emissions reduction, basically reaching 80% reduction of CO2 emissions by 2040 compared to the government's baseline scenario. This is actually interesting because this would actually provide some insights for us should the Philippines consider to achieve carbon neutrality by 2050. And for that to happen, you really have to go a much higher emissions reduction by 2040 than what is actually implied by the current government plan. Next slide. So the analysis is actually undertaken with a least cost power system expansion model, which is used by DOE. So the underlying analytics are actually quite consistent from what we did and what the DOE has done in its energy planning. As we can see, the accelerated decarbonization scenario is going to have a tremendous impact on the power system technology mix. Essentially, what this tells us is that if the Philippines is aspired to reach carbon neutrality by, say, mid-century, it really have to ramp up the renewable energy investment dramatically, and also in the same time, starting to face down coal-fired power around 2030. Right. Next. The impact on the generation mix side is also, similarly dramatic. As you can see, compared to the government's current plan of reaching 50% renewable energy mix in the power generation, an accelerated carbon decarbonization of the power sector basically requires renewable energy mix to reach over 80%. So, and as we also can see here, natural gas-fired power generation will remain quite important in this mix to provide the flexibility to support, the large variable renewable energy share in this picture. And at the same time, as you can see, that coal-fired power generation will come down very significantly, basically reaching about 4% of the power generation mix by 2040. So that is a daunting challenge, of course. Next. So the good news is with accelerated decarbonization in the power sector, you will see very dramatic reduction of ambient air pollution, as well as carbon emissions. You will actually see the cumulative emissions of carbon will start to level by 2040 compared to the government's clean energy scenario. Next. There's still good news, quite good news, I think, is that even with accelerated decarbonization, the levelized cost of electricity by 2040 is still going to be lower than the levelized cost of electricity in 2020. Right? But as you can see from the right-hand panel, the not so good news is that the accelerated decarbonization will be more costly than the government's current clean energy scenario. So that is an issue we have to address if we want to encourage Philippines to adopt more ambitious decarbonization in the power sector. Next. The key reason for that, as you can see from the left panel, is that the accelerated decarbonization, as we described, will require a doubling of the cumulative capital investment in the power sector. And the right-hand side panel gives you more details on where the investment goes. As you can see, almost all of the incremental investment will be going into variable renewable energy, particularly solar and wind, and as well as the battery storage system needed for supporting this type of integration. Next. So we need to sort of broaden the assessment a little bit because what we have shown here before was that the levelized cost of electricity is calculated based on the traditional cost and benefit assessment of power system expansion. So it does not include the environmental benefits, health benefits of emissions reduction. It does not include the cost of stranded assets if early retirement of coal-fired power plants are needed. So what we're looking at here is a table that summarizes of all the costs and benefits from a system lifetime cost point of view, that not only include the traditional cost elements, that is sort of the top 5 or 6 rows of the table, but also include some of the newer costs and benefits that is entailed by the energy transition, particularly the cost of stranded assets, of early retirement for coal, which is actually quite substantial, as you can see, but also the benefits of reduced local pollution, as well as the contribution to the global environmental benefits in reduced CO2 emissions. So with this, as we can see, that the accelerated decarbonization is actually preferred, right? But the underlying message is really, if Philippines is going for the accelerated decarbonization in the power sector, it really needs international help, including the share of the cost burdens of that incremental cost we mentioned before. So without that, if purely thinking from a national interest, it is very difficult for the Philippines to go for this higher carbon emissions reduction. So we really need the international community to come in, to work with the government, not just providing technical assistance, but also providing real financial assistance as well. Next. Go to the next. So we have, several recommendations. The good thing about this recommendation is that, in generally, they are very consistent with the government, what the government is already doing or planning to do. So this really helps us in terms of aligning our goals and support areas, priorities, right? I just want to highlight 3 things here. As Secretary Lotilla mentioned, transmission is critical going forward. And the second thing is that energy efficiency interventions is also very critical, because this really will help the Philippines to moderate the growth trajectory of power demand, which will help reduce the burden of incremental investment in the system expansion. And thirdly, this comes back to the just transition that Secretary Lotilla mentioned. And then I think this is the area that we, the development partners, need to really work diligently with the government to really start to think about how policies, what kind of policies will be needed to help Philippines to accomplish a just transition going forward. So with that, I conclude my presentation. Thank you very much.
Thank you, Feng, for taking us through the government's energy transition agenda and for that very interesting presentation on how we can get to a clean energy future. At this juncture, I would like to acknowledge our partners for collaborating with us as we work toward achieving energy security for the country. We would like to thank the European Union, the Australian government, French Development Agency or AFD, and the United Kingdom for supporting our engagements in the sector. We would also like to acknowledge the Energy Sector Management Assistance Program, a multi-donor trust fund for supporting our energy transition engagement, including the analytics underpinning the PEU energy transition piece. I'm excited to segue to the next part of our program, our panel discussion with our esteemed lineup of experts. I'll be turning over to Attorney Jose Layog Jr., who'll be moderating and introducing our panelists. Attorney Layog is a champion of renewable energy in the country, serving as the chairman of the National Renewable Energy Board from 2016 to 2018, and served as Undersecretary of the Department of Energy from 2010 to 2012. He is also a senior partner at the Divina Law Offices and the president of DREAM, Developers of Renewable Energy for Advancement, Inc. Friends, please welcome Attorney Jose Layog Jr., more popularly known as Jay.
Good morning, everyone. Thank you, Karen, for that introduction. I'm so tempted to deviate from the script because after I heard the report of Ralph and Feng, there's a lot to say about the report. But of course, we're so proud that admittedly, even before your report came out, the DOE was ahead of you, under Secretary Lotilla. All the efforts that we've been pushing for the last 6 years happened in 4 months with DOE Secretary Popo as the secretary. So I think a round of applause for that. No? Don't worry, I don't need anything from the DOE. No? But really proud that all our efforts came into play finally, despite all the 6 years of lobbying from the previous administration. So again, welcome everyone, and especially to those in Facebook and in Zoom. We are honored to have with us esteemed panel of experts in person from government and the energy sector for what I'm sure will be a very insightful exchange. And we will ask a lot of questions on securing a green energy future for the Philippines. And I have the privilege of introducing them one by one before asking each of them to join me here on stage. Our first panelist, and I've seen him too many times in 1 week. Not only do we get to eat a lot of their pastries, we see a lot of their offshore wind developers. I've seen him 3 times already this week. The champion of renewables, of course. Our first panelist is the ambassador of Denmark to the Philippines and Palau. Prior to his appointment, he served as Danish ambassador to Afghanistan, Japan, UAE, and Qatar. He is also a permanent representative in the International Renewable Energy Agency, or IRENA. Ladies and gentlemen, please welcome His Excellency Franz Michael Melvin. Thank you, Ambassador. Our next panelist is no stranger to the academe, and if there's anything we can be very proud of, especially with the Department of Energy nowadays, is Secretary Popo Lotilla surrounded himself with intelligent policy makers, because he gets them from the academe. Our next panelist is the Undersecretary of the Department of Energy, who supervises the Renewable Energy Management Bureau and the Electric Power Industry Management Bureau. Prior to her appointment as DOE Undersecretary, our next panelist served as the President and CEO of the National Transmission Corporation. We have a lot to talk about regarding that matter. She was also the Undersecretary for Research and Development of the Department of Science and Technology from July 2016 to June 2022, where she served as the first program leader of the Science for Change program, a recipient of the 2022 United Nations Public Service Award. Ladies and gentlemen, please, let's all welcome Yusek Rowena Cristina Guevara. We are also privileged to have with us a good friend, the President and CEO of Citycore Energy REIT Corporation, the very first energy-themed real estate investment trust in the Philippines. Citycore is also one of the leading solar energy generators in the Philippines today. Our next panelist is a result-driven visionary in the energy industry, and don't be fooled by his looks. He's no longer 21 years old, but he looks 21, an eco warrior. Ladies and gentlemen, Mr. Oliver Tan. And rounding up our panel of experts is an associate professor of the Electrical and Electronics Engineering and the associate dean of the College of Engineering at the University of the Philippines, the best university in the Philippines, right? And once upon a time, I've been working with this next panel member. 10 years ago, we were still young, no? But of course, we still feel young until now. No? His fields of expertise include energy system modeling and simulations, planning, operation, and control, renewable energy and GHG emissions, and modeling. Ladies and gentlemen, dear friends, let's welcome Professor Wally Del Mundo. All right. So what we will do in this panel is we will have 2 rounds of questions. No? And we will have 45 minutes for this session. And later on, we will invite you, our audience, and also those in Zoom and in Facebook to please send your comments or ask your questions. Now, all right, just please bear with us with our faulty monitor. I'm not even looking at the monitor here on stage. No? But please direct your attention to the other screens in the room. All right. Do you have a microphone? Okay. Unless you have an additional microphone, let me kickstart the discussions with a question to Ambassador Melvin, whom I've seen too many times in 1 week. No? Ambassador, we've seen lately you launched one of your stakeholders has applied for service contracts for offshore wind in the Philippines. We all know Denmark is one of the global leaders, no, in renewable energy. Perhaps you can share with us, no, to the Philippine government, how did you do it and what lessons have you learned so that we can emulate Denmark?
Well, thank you. Thank you. So first and foremost, I'd like to underline that the Philippines actually did a lot of things and did a lot of things right to get accelerated when it comes to introducing large-scale renewable energy into the system. I commemorate both the President, the Secretary, and the entire team of the Department of Energy for all the work that has been done. But nevertheless, there is still more work that needs to happen to catch up. And 3 highlights, building on our own experience from Denmark, that I think could be very important for the Philippines to keep in mind is, first and foremost, the need for political consensus in the energy sector. Energy has a very long time span, and you need long-standing, stable policies within the energy sector to allow large-scale private investments to come in and be a backbone for your energy development. And because changing the electricity delivery in this country and reaching your goals will need structural change, and structural change is always difficult in any political environment. Building political consensus around the energy policies will be very important. It's not just this administration, not just this president that can cut it. So that would be my first lesson learned. We had this in Denmark, broad-based political consensus. It's been extremely helpful in making it possible for Denmark to move very fast, very decisively into this area. The second thing that I'll highlight is the need for infrastructure to be able to keep up with the generation of variable renewable inputs. Having generative capacity is great, but you do need to make sure that the grid infrastructure, that the landscape that will actually allow this generative capacity to come online, but also to grow significantly, that is in place. And here, of course, just as we heard Secretary Lotilla underline, there's a lot of work that needs to be done. And even in Denmark, I can say, because we have such ambitious goals for up to 2030, we're going to quadruple wind in Denmark over the next few years until 2030, quadruple wind in Denmark. Even we need to make very large investments into our grid system to keep up with that. There are a lot of benefits from that, including the ability to make a higher degree of systems integration, such as sector coupling. We do this a lot in Denmark. I think there's a lot of opportunity for the Philippines here. In Denmark, we do cogeneration of heat and power. In the Philippines, you could do a lot of cogeneration also as you make your energy system smarter. That will also lower the cost of going large-scale renewable, and it could lower the cost significantly. It has done so in my own country, and you could do it with cooling. I know you don't need a lot of heating like we do in Denmark, but you can do cogeneration with cooling instead. The last thing is, of course, the regulatory framework. And the government, again, has done a lot. I'm very impressed. We saw the president's recent announcement here, which was very helpful. However, there's a lot more work to be done. I'll just mention two small, short examples. One is local government units, and here the purview of the state, the way the Philippines works and is constructed, there is a challenge. The government can promise a lot, but what happens then when you hit the local government unit level? That is a challenge that needs to be solved nationwide in a way that will allow the Philippines to move forward with its energy plans in an efficient way. And another example is that right now there is no regulation for environmental approval for wind farms. So the applicable legislation is the one about mining. But in truth, of course, wind energy is up there in the air, mining is down there under earth towards hell, and it's not going to be a happy marriage. So there's still regulatory work to be done, and getting that straight is very important. It's not magic. Lots of countries have done this, and I know Lotilla and his team, when they visited Denmark recently, took some inspiration from some of the things we've done. We can also take inspiration from the Philippines, including the parallel certification approval system that has been set up here. Great move. More of that. Thank you.
Thank you, Ambassador, for that question. Let me just follow up. Assuming all planets align and the infrastructure is in place, the regulatory framework would be in place, how fast can we see the first offshore wind in the Philippines?
Well, as I promised the president, you know, I said to him, Mr. President, cut the red tape and we'll cut the red ribbons together. It can be done, but it will take work.
Okay, I think the ambassador said 2028 will be the first offshore wind, right? Okay. All right, we'll proceed to the next question. And I'd like to address this to Yusek Guevara. We've seen that energy demand will double by 2040. Ma'am, what priority programs do you have to make sure that we meet that energy demand in the Philippines?
Thank you for that question. I imagine that based on the data shown by World Bank today, that the per capita energy consumption in the Philippines is quite low. I mean, it's 0.9 megawatt hours versus 2.8 in Thailand and 5.2 in Malaysia. We have a lot of catching up to do. So even just doubling it, which is going to 1.8, is still very low. But our population is also increasing. So if you do all of the math, we need about 3 times what we have for the power industry right now. So we are in a mad rush for renewable energy to be put up in the country. In fact, the Department of Energy has awarded over 1,000 service contracts for renewable energy, totaling 80 gigawatts. 80 gigawatts is 3 times of the current capacity for generation in the country. So the numbers look right. However, we know that, as the good ambassador mentioned, it is in the details where the problem lies. We know that permitting and licensing is a difficulty for many of our renewable energy developers. To that end, we have requested the President to issue Executive Order number 21, which is basically to help offshore wind developers get over the permitting, the licensing in a timely fashion. What we're going to do is that all of the requirements, the processing, the fees, and all that for all of the permitting agencies in the entire country will be enrolled in the Energy Virtual One-Stop Shop. The EVOS, based on the Republic Act 11234, says that if somebody submits an application through the EVOS, and it says there the decision should be out in 10 days. If the decision is not out in 10 days, then the application is deemed approved. So it's a very deadly facility for the government because, you know, it's a commitment to being able to give timely decisions on applications. And so we have met the permitting agencies for offshore wind. We've already met twice already. And by June 18 of this year, they're going to submit to the Department of Energy all of the requirements, their processes, and their fees, and we are going to integrate this into EVOS. It will take us about maybe 1 year to integrate everything. But my point in saying this is that we know at the department that at this point in time, we already have the investors for RE. What we need to do is we need a whole of government approach to make sure that these renewable energy projects will see the light of day. And one of the things that we did was we reviewed which one is the fastest offshore wind developer. And we saw that it is the one that is developing in Ilocos. They promised to deliver by the first quarter of 2028. So we used the timeline and, you know, went backwards and we said, okay, they are going to need ECC by this date, EIA by this date, and so on and so forth. So we have been working with the other government agencies to ensure that the timeline for the first developer will be fulfilled in time. And as the Secretary mentioned, the transmission development needs to catch up. And to that end, we have been having conversations with ADB, and I'm going to meet with Indiame later for World Bank, so that we could figure out what is the possibility for the development partners to help in addressing our transmission problem. At the end of the day, even if you have all the RE generators generating, if we don't have the transmission capacity, then we will have stranded power. So those are the things that we're doing.
Okay, thank you, Yuse Guevara. It's the second time I've heard 2028. So we expect the first offshore wind in 2028. Yuse Guevara, one of the challenges of the private sector always is the number of permits. In fact, right now as we speak, you need 200 signatures just to put up any power plant. We're hoping, and as the government discusses offshore wind, we hope you can cut down those 200 signatures, especially for offshore wind.
The Executive Order 21 specifically says that we have to streamline. We also have to rationalize the fees. And also, we have to make sure that when you're asked to submit a document, you will only be asked once to submit such documents. So these things are in the works. And there is also something about EO 21. All the permitting agencies are supposed to submit by June 18 all of their processes to the Department of Energy for offshore wind. If they fail to submit anything, they cannot add after June 18. So by June 18, we will know exactly what are the processes, the fees, etc., for all of these permitting agencies. So I hope I answered your question.
Yes, ma'am. And I hope all agencies would join EVOS, because right now it's still the Department of Energy that's in there.
No, actually
Other
NCIP
agencies.
is already there, the
Okay.
DNR is there, ERC is there.
All right. Okay. So much to look forward for, especially for the private sector. No? And let me go now to Oli, who's been at the forefront of building solar farms in the Philippines. Oli, Citicorp, of course, has been developing so many solar farms, part of your corporate sustainability programs. We've seen that also globally. And I guess from a private sector perspective, Oli, what else can the government provide as incentives so that we can entice not just you, but everyone else in the private sector to move towards transition?
Yeah, good morning, everyone. I believe that the current fiscal and non-fiscal incentives, especially for solar and onshore wind, are more than sufficient to encourage investment. But having said so, should our government will be generously to provide more, we are more than happy to accept them. But seriously, the same may not be the case for new technologies such as offshore wind and energy storage systems, particularly battery, because these technologies are not mature compared to utility scale solar and onshore wind. Hence, I believe the government should provide support, whether fiscal or non-fiscal, to encourage. And with the magnitude of variable renewable energy that are planned to be implemented, I think the more we need energy storage system, this is to partner our solar and wind, essentially to address the intermittency, the variability nature of this. So one practical approach that perhaps the DOE may consider is maybe on the next JUP round or the green energy auction is to introduce a different gear price for solar and battery and for wind and battery, right? Yes, a different gear price to standalone solar because the battery today is still has yet to achieve a commercially viable price. And second, on the ground, I think we need to start to shift support towards building the supply chain, right? Because of the magnitude of the number of projects to be rolled out. You know, for you to procure wind turbines today, the lead time is more than a year or two. So I think we need to, that will be the next bottleneck in terms of how do we really implement this huge target, right? And thirdly will be financing. While our local banks today are happy to support this renewable energy project, once all this offshore wind and the other new technologies start to come in, I think we need to encourage the foreign banks to also start looking to provide funding support for this project. But one practical approach there, maybe our government can consider again, is to perhaps for the gear price to link to some forex fluctuations in order to really encourage private sectors to borrow in different currencies, thereby attract more foreign banks to support these projects, right?
So you're suggesting indexation, no? Although that's something for ERC to consider. No? But let me go back to the whole of government approach of Yusek Guevara, which is very critical. No? And I'm sure because when you implement your projects, you deal with different agencies, and one or two of them will not follow the law. No? What would be your wish list to the government, especially that we have lawmakers here as well? What do we do with government agencies who refuse to implement the provisions of the law?
Obviously, the wish list of every private sectors or a renewable energy developer is to address the regulatory bottleneck and also the permitting obstacles, right? I think the EVOS system is already a very good start. We just need to encourage all the other government agencies, national and local government agencies, to really be involved and actively participate by enrolling the same in the EVOS. To develop, for instance, to develop one utility scale solar, you will take 12 months or more just to secure these permits. And to actually build the solar plant will only take 9 months. So it takes more number of months to secure permits than actually building the solar plant.
Yeah. And I guess you don't have to confirm this. Land conversion, ma'am, takes 1 year. And that's always the challenge for solar developers. I'm not sure if you have any plans to somehow cut the time, no, for that process. No? But maybe it's something that you can discuss, no, with the government agency. All right. Just to finish off the first round of questions, no? Professor Wali, you've seen the report, and you and I have read it. No? Nerds like us usually love these reports.
Just yesterday.
No? Professor Wali, you saw there, no, in the report that the Philippines, just like in all other sectors, we lag behind when it comes to technology advancement. No? And we have seen in the report that our Asian neighbors are already advanced in electric vehicles. And we don't have much here. No? What can we do, Professor Wali, so we can catch up? And it's part of moving towards also the transition, right? Veering away from fossil fuels. No?
Yeah. I think it's interesting to look at India and Vietnam. Of course, both two countries have decided to manufacture electric vehicles in the first place. I think that's one common thing that happened in these two countries. And that deciding to manufacture actually forced them actually to look for ways to deploy what they'll be manufacturing. Vietnam, for example, has 250,000 EV capacity annually, and they have to do so. Since the transport sector of Vietnam is also a bit organized, so they have now actually embarking on EV taxi. That means almost all taxi in Vietnam will be, and that's the one that will basically eat up the demand for the locally manufactured EV. In the case of India, it's interesting. The motivation was that more on the running costs, because I believe in India, while the cost of the locally manufactured electric vehicle is 1.3 to 1.5 times the normal or conventional gas or petrol vehicle, but the running costs emphasized to the people is that if you spend 8 to 10 rupees per kilometer using your conventional, but it takes only 1.2 to 1.5 rupees per kilometer running the electric vehicle. And I think for Indians, the mentality is that if it's just cheaper to run this, then they are encouraged to even buy a more expensive EV. And in my view, somehow the Filipinos have such kind of mentality too. That's why we saw a lot of diesel cars in the country compared to gasoline, even for passenger cars, because the diesel cars can actually, it's cheaper in running costs. So maybe we can take advantage of that mentality and see how we can market EV in the country.
And maybe more incentives, no, to lower the cost of
Right.
imported e-vehicles, no?
Yeah,
It's
and that's connected to what I said, the manufacturing. When they decided to manufacture, that means their target really is to make the cost cheaper for the locals.
Okay. All right. At this time, we'll open the floor to any questions that we may have. And also for our online viewers, any questions from Facebook or Zoom? No, let us know. Do we have any? Yes. Okay, I think this is a question for you, Guevara. No? Quite a tough question. How feasible is it for renewable energy sources such as solar to replace coal as baseload source of energy, given the number of typhoons that hit the country? In other words, and this is always the debate, no? When we push for renewables, we know that the sun is out only during the day, but coal is a baseload power plant. No? How can solar replace coal?
The question is specific to solar, right? if I were to answer that question, I would say, well, the solar is going to need energy storage system such that it can do the work of the base load. But you know, we have several types of renewable energy available in the country. We imagine, for example, hydro, geothermal, taking up base load. And we also have recently LNG, Ilihan started running. It's at 600 megawatts today and will reach 1,200 megawatts by June 9. So that is also another potential base load if you're just decreasing the carbon footprint. But we know for a fact that there are technologies available, two things. No? One, co-firing coal with hydrogen or ammonia. And if we have overproduction of energy with our offshore wind, we can convert that to green hydrogen and green ammonia. And then this can be used by our coal plants for co-firing. I know for a fact that like Quezon Power is planning to experiment with 20% co-firing by the end of the year. And in Korea, they are doing already 30% co-firing with coal. So that is one way. The other way would be to look at other types of energy storage system to come online. Like we have flywheel energy storage systems, aside from the battery energy storage systems, and pumped up storage for hydro. I think those are potential technologies that will help in the long run.
The other question, Yusugev, is again for you. And I think it's part of the excitement for offshore wind. They're all asking when will be the auction for offshore wind because they're not included in the 2023 auction.
We actually consulted with the offshore wind service contract awardees, and they said that next year would be a good time for them. So we plan to hold an auction that includes offshore wind by next year. But perhaps the design is going to be a little bit different. As mentioned by Mr. Tan, there is a need to rationalize the gear prices depending on the technologies that are being used. And this time for the GAIA 2, Green Energy Auction 2, we had a lot of communication with the Energy Regulatory Commission and the developers because they were not happy with the original gear prices that ERC came up with. So we maybe have to redesign GAIA for offshore wind next year.
And maybe, ma'am, on the second auction, maybe a little higher on the prices as well, no? Because all developers are asking, is that the final price, no? On the gear auction 2? Might be a little too low, given, and this is part of the current data that you have, no? If you go out in the spot market, no? And even if you buy to contestable customers, the price at which they can sell their power to is still higher than your current green energy auction tariffs. No? So we might not get enough bids if in the market there's higher price for them. No? So
yeah, we have communicated that matter with the ERC, and they also held public consultation with the developers. I think the prices are coming out next week, so we will see.
Higher prices are coming out next week.
I didn't say that. I just said the prices are coming out.
Okay. All right. We can provide. Okay, go ahead. Ollie would like to add.
Just to add on the first question, if solar can really replace coal in a typhoon-prone Philippines, right? Obviously, the answer is no. If it's solar on a standalone, right? However, if you complement solar with battery energy storage system, and we are piloting our first utility-scale solar and battery. Based on our study, it works like a mid-merit supply already. It can provide 13 hours of supply. And if you further partner solar, battery, and wind, you can almost resemble like close to a base load supply. Now, to answer on the typhoon-prone, one of the mitigation to address that is obviously to geographically diversify the location.
How about the price, Ollie? We know it's still a challenge when you put batteries in there. Will that be able to compete with coal and mid-merit plants?
Yeah, obviously in the next 2 to 3 years as battery technology continue to evolve, we are seeing prices combined with solar battery to be at par or in fact better than a coal-based load
Oh, okay.
at current price of coal.
Okay, which is about $400 per metric ton. It has gone down, by the way. Ambassador Melvin, with Yusek Guevara's declaration for auction for offshore wind next year, what is your crystal ball looking like in terms of what would be offshore wind price in 2028? We won't pin you down for that number, but...
Well, I won't dare give a number, and I think that fortunately there is a lot of knowledge on the side of the people who are going to try to set the price. What I think has been healthy is that there has been an interaction with the developer side, so that there has been exchange of information. So there are two things to look at. One thing is, of course, the Philippine market. There's also a global wind market out there. And that's important for the Philippines just to think about, because there's quite a lot of competition when it comes to getting wind projects up and running. So if the Philippines doesn't sort of hit an attractive price level, they may be less attractive, because there's a lot of demand for wind projects out there in the world. But I think I hope and I think the price will be right.
Okay, so if we do auction next year, Ambassador, more or less your stakeholders can submit a price for a 2028 COD. That's possible.
Yes, they definitely want to do that.
Okay, all right. That's very critical, ma'am, no? Because we need to know what the price will be when they build it. Of course, it takes a long time to build offshore wind farm. All right. If there are questions from the audience, please, we encourage you. There are microphones around. No? Questions? Yes? No, otherwise I'll keep asking my questions. No questions so far. Yes, yes, sir.
Good afternoon. Don't know. My question is about agriculture. How do you see agriculture is a critical sector when it comes to competitiveness, inflation, as was shown during the Philippine economic update. It's also a sector that requires a lot of energy, particularly if we want to make it more competitive. How do you foresee the energy transition in this sector?
Who would be best? Well, let me ask Ollie, because Ollie has been working on solar farms, but at the same time addressing the agricultural component of that. Ollie?
Yeah, we actually pioneered what we call the agro-solar concept in the Philippines. We are very cognizant of not dislocating agricultural land in lieu of solar power. Hence, what we are doing is that we try to coexist with the farmers. We plant high-value crops underneath the solar panel table and along the aisle, and we partner with farmers to augment their income.
Yes, Yusek Guevara. And Ambassador Melvin.
Yes, just a very short comment to that. I think that this is really about a transition, which also is a transformation. So we need to think in new ways about this. So one area is biomass. This country has a lot of options for biomass, and that could be helpful to the agricultural sector for sure. And it could also be part of an agro-industrial development. It's been that in my own country, and certainly there are a lot of opportunities for that also here in the Philippines.
Actually, the same answer, waste to energy.
Okay. Before we continue, we'd like to invite to the stage, because Ralph went ahead. May we invite Feng Liu to join us here in the panel. And Ralph, of course, has joined us as well, as we ask questions on the report. Again, for our audience in Zoom and Facebook, you're watching the public launch and forum for the World Bank's Philippines Economic Update, June 2023 edition. All right. Let me ask Feng. Feng, we've seen the report, we've seen your recommendations, quite a lot. No? And in fact, I mentioned that the DOE is already 3 steps ahead, no, before you release the report. You've seen the aggressive target of the DOE with 11 gigawatts by June, no? And that's already working towards your recommendation. No? What can you suggest about, as we build all these power plants? Now, one of your recommendations also is on infrastructure, right? How do we address the issue of transmission and distribution system for all these new power plants that will go online?
Thank you. I think this all starts from the upstream planning, right? So we need to understand where the future node will come from and where the future generation will come from, you know, including all these new additions of solar, wind, offshore wind. And then you need to analyze how the grid infrastructure is going to actually support, you know, to bring the generation to the load centers in different places of the country, whether it's Luzon or Cebu. And then based on that, to prioritize where you would encounter, you know, major bottlenecks for transmission, right? So we are already actually doing some analysis together with DOE to precisely address those issues, to identify where are the priority areas and transmission infrastructure that need to be developed in time for addressing those issues. Yeah.
Professor Wali, the expert in transmission, how do we address that? We're always behind, you know, generation plants are built, but the transmission line is not there.
Yes, because of the, what we call lead time. For transmission projects, the lead time is 5 years to 10 years. And yet we know that on solar, for example, you can build solar even in less than a year. 1 year, let's say, put that year. But then that means that there's a big disparity. And then the reality on the ground is that the transmission projects, as we monitor, that data from NGCT, for example, shows that more than 50% of the projects are delayed, and some delays are even 9 years, 1 year to 9 year delay. And they have identified that the majority of the delays really coming from the right of way. So to me, the key in addressing the problem of having a synchronized development of transmission and renewable energy that are fast construction development is to look at new ways or pursuing different ways of getting the right of way. Because the traditional way of getting right of way is that a project has been submitted for approval to the ERC, and then it's only after the ERC approval that the concessionaire of the transmission will start asking for right of way. My view is that the government should plan the transmission system given where these renewable energy are, regardless of when they will be developed. But in fact, the JEA, the auction, could actually be the way to determine when specific areas should be coming in, and therefore, and assign to the owner of the transmission asset, Transco, the acquisition of right of way, even before the concessionaire go to the ERC. That means after the planning of the DOE, zeroing on which particular transmission projects will really be needed by the renewable energy. Then let the owner of the transmission asset acquire. Because even if it takes 5 years, for example, to take the right of way because of the problems in the acquisition process, then you're putting yourself a lead time. You're canceling the lead time problem by actually getting all this right of way prior to the auctions.
Yusek Guevara, you took over Transco for a while, no, under this administration. And one of the challenges before this government took over was, if you recall, we did the Race to Fit program. And without much planning, everybody built in the Negros Island. When we all know there was no transmission capacity. That's a good example of government not thinking we just wanted generation, but at the same time, everybody building there without coordinating with the transmission system operator. Ma'am, what are we doing now to make sure that this issue of it becomes too emotional, but at the end of the day, the private sector just wants a collaborative effort between the government and, of course, Transco and NGCP to make sure all these infrastructure, all the lines are built as they put in their investments. What are the plans, ma'am, of government?
Well, you asked me when I was at Transco, one of the things we did was we had serious conversations with the National Grid Corporation of the Philippines, and we were able to reduce the length of time for the SIS, which everybody is worried about. And then we also worked with them in this manner. We asked NGCP, which of the projects do you need right-of-way for reconductoring, for increasing the capacity? And those are already built. And therefore, Transco owned those right-of-way. And we basically said, let us acquire the right-of-way for those projects that NGCP will be working on. Exactly what Professor Wally suggested. And one of the new things that we're doing at the Department of Energy is, before, we came up with the Philippine Energy Plan. It included all of the upcoming generators. And then we wait for the Transmission Development Plan coming from the NGCP. But this year, the Philippine Energy Plan will include the transmission plan. And that is one way to make sure that we will not have stranded power, especially from renewable energy.
I was just hoping, Yusek Guevara, you had taken over DOE way before. Remember, EPIRA was passed in 2001. And we're only doing what you had suggested only now. Because the Philippine Energy Plan, it appears, did not consider the TDP before.
I also want to add, when we issued the terms of reference for the green energy auction, we also added information of where the available transmission capacities are, and we encourage the applicants for the JEA to build in those locations.
Okay. And ma'am, if I may push for the agenda of the private sector, whoever wins in the auction, can you help them be prioritized in the SIS? Because the queue is still too long.
We'll talk about that.
Okay, all right. Okay, we have a question. Yes, Congressman, we're very honored to have you here.
Yung renewable kasi walang excise tax, but zero batted. So obviously, I need a translator pala dito. So, practically it should reduce power cost already. Pangalawa, regarding, I think Congress, the sovereign policymaker of this country, has already saw that we should prioritize LNG. And we put LNG at par with renewable, although not renewable. But since it's non-carbon, so basically, House has already approved the PNG bill, the LNG bill, which essentially exempts it from zero vatted. And then, kung domestic ka, because it's domestic market, yung transition mo from coal to LNG becomes essentially 100% deductible from your so you have that ED system that allows it. So yung pangalawa, Congress, the House has already approved the new ODA law, which allows for blended financing, which allows for essentially as low as 15, even adjustable in terms of the grant component. And it also allows supplier by essentially if we say that kung ang supplier ay not available kasi may Filipino first policy pa tayo, but that ODA law essentially preserved that allow unutilized balances to be diverted, essentially critical capabilities not available in the Philippines by exempting such capabilities from the Filipino supplier And so, tapos the PPP law has already been approved as in the House. It's now already a committee report in the Senate, and the President has already considered it urgent. If you combine all these three, I think there's enough impetus from a policymaker perspective to support a more aggressive. Sabi mo kanina, bakit tayo 0.9? Because we don't have industrial production. But if you just put it on a consumption to consumption or a household to a household basis, we're there, we're par. But we're not producing anything eh. And that's because of two things. One, because our power cost is very high, which hopefully we can already reduce, essentially because of the new regulatory framework that's evolving essentially in favor of renewable or non-carbon. And essentially, which you also face, is EODB. You know, nagkukwento na ako. Bawat recess namin, umiikot ako sa lahat ng ASEAN. Nakita ko talaga doon ang kinaibahan. There's an emerging mega region called the Indo-China region, and you know they're trading like anything. Even power is a tradable commodity, and that's very surprising to me. And what I see there is that their power costs are like 6 pesos. There's even Laos at 2 pesos. I don't know what they do with it, but essentially Philippines still an average at 10. So obviously, ang nakikita ko dito, kaso puro 2028 ang pinag-uusapan. So the fastest way really is to shift coal to LNG. And that is why I think hopefully you can put pressure on the Senate kasi approved na on second reading sa House yung LNG law basically, which essentially one makes it a renewable, how do you call it, a legal construct essentially. So it's as if it's renewable. And second, which exempt it from, it's zero VAT, no excise tax, and more than that, of course, nakalimutan ko na yung isa pang, yung shift from from coal to LNG will become 100% deductible under the enhanced deduction system dun po sa CREATE law. So, ang ano ko kanina, parang there was something missing about, about DOE putting some focus on LNG.
Actually, Kong, if I may, they are pushing for LNG. But if I may add to that list of bills you have, we need to amend the Presidential Decree number 87. That's the Oil Exploration Act. It's an antiquated law. Of course, LNG is good. We import that. But we need to find our own oil and gas. And PD 87 has been there for quite some time. It has so many question marks, which has unfortunately, drawn away.
Give me a minute and I'll talk to my...
Okay, all right. So we might have another bill on that. I don't want to disregard our viewers online, because they sent some questions very quickly from a good friend from Coryo, of course, Alma Rojas Aguila in Zoom. Alma asks Yuse Guevara, are we sure already of the inclusion of offshore wind for auction next year? Because they are ready to bid. No, I just added the last part. Yes, Yuse Guevara. Yes, okay. Alma, it's a resounding yes. So please be ready for the auction next year for offshore wind. Another question from Isabelo Rabuya on Zoom. With the fast market developments currently going on, e-vehicle that will eventually reach the Philippines, are the current T&D infrastructure ready to take in high power fast chargers needed to support the system? I think, Professor Wally, the answer here is no, right? The charging stations.
The infrastructure is not very ready to, at the same level that for example, Netherlands, for example, developed their system that is really adapting to the electric vehicles. But I think our distribution systems are not that quick to accommodate the startup. So I think we just need to, I think, change again or update the way the distribution plans are being prepared by the distribution system. at the end of the day, the fast charging thing will actually transcend to the system operation at the transmission level, which is again the ancillary services. So I would worry more on the ancillary services, particularly the regulating reserve, that would be needed if this fast charging thing actually would be affecting our system.
Okay, let me ask this question to Ralph. No, it has to do with cost, no, and given your paper as well. This is a question from one of our Energy Beat reporters, no, an institution, Anna May Flores, Alina, on Facebook. Ralph, you've done the studies on the macroeconomics and microeconomics for Philippine transition. The question here is really, how do we balance between transitioning to cleaner forms of energy versus the potential higher cost attendant to that transition? What should government do there?
Thank you very much. Apart from estimating and relying on the cost trade-offs that Feng mentioned, there's many countries are introducing a form of carbon pricing, and the government has shown interest in doing so. They haven't made any choices, so it seems quite early. We see that many countries have adopted emissions trading scheme or a carbon tax that would help tilt the balance towards away from fossil fuels and into renewables. And a form of carbon price that's well designed, that's easy to levy across many sources of emissions, may indeed help raise revenue for the government, which is also quite well needed in this country, but also it will help finance making those strategic investments that can help promote the introduction of renewables. So that's one way in which you can change the relative price.
Okay, Ambassador, would you like to add to that question?
Yes, I think it's a very important question because the cost needs to worry people in this country. They're already paying a lot for their energy. But there is a wider economic perspective here because there are also macroeconomic advantages of going renewable. We rely on Philippine sun and wind and not imported coal or LNG. There's the question of job creation, which would be higher in the country if you move towards renewables, which I also think is important. And then there's really the question of how do you foresee the long-term impact of introducing large-scale renewables. And Denmark is the country in the world that has the highest degree of variable renewable in its energy system. We have the lowest equalized generation costs in the OECD, and we have the highest quality electricity in the world, the most reliable electricity in the world. So it can be done, and I don't think there is an inherent contradiction between going large-scale renewable, including on the variable side, and the long-term cost of that. But of course, in the beginning, you have a startup cost, no doubt about that. And as I also said before, sector coupling and a more integrated energy system is also a way of effectively lowering the cost of oil. We're talking about a very high degree, 30-40% lower costs just by sector coupling.
Okay. Would you like to add anything to that, Yusa Guevara or Wally, on the costing? We're good? All right. Professor Melvin, now that we still have you on the microphone, there's a very important question, not phoned in, but actually by our good friend Coco, who probably left already. This is a question from Coco Alquas. Ambassador, earlier you heard the Secretary challenge the World Bank, because Secretary Popo said we privatized, right? But the others are getting the JETP funding. We're not getting it. Ambassador, what do we do there?
I take the challenge. It is deeply unfair, and Denmark strongly supports the Philippines in that there needs to be more thinking in the international system on how to make sure that countries where you do not have a state-owned, state-governed energy system also can become applicable. And Denmark strongly favors that there should be a just transition that also includes help to the Philippines to move towards cleaner energy. This is not just about money. I think actually you can get a lot of private investment coming in if you have the right kind of regulation. It's also about acquiring expertise that can be very helpful in supporting building a resilient, efficient, and cost-effective Philippine energy for the future benefit of all Filipinos.
So, Ambassador, you'll make sure we'll get the funding that we need.
We will
Yes.
fight
Okay.
for making it available for the Philippines.
Okay, thank you. We need to wrap up already because we don't have time, but I'd like to thank again the members of the panel. Ladies and gentlemen, we're so honored to have you here and to you providing all your thoughts about the transition. And of course, to the World Bank, Ralph for the paper and Feng, very appreciative of what World Bank has contributed in the paper. Again, we're still very proud. I keep saying that we have Secretary Popo, Yusek Guevara, and the entire team. They were ahead, and it's good. No, it's been a while that we've had a DOE team that really knows what it is doing, and the target is there. No? So we encourage everybody to please join in all the programs of the DOE. There will be 11 gigawatts for bidding on June 19, which I think will be adjusted by a few days, no, ma'am, because of the tight deadline. No? But we're happy that the government is now finally transitioning to where we should be. No? We said this 6 years ago, and then here comes coal prices going up $400 per metric ton. We all suffered from that. But I missed one question for Wally on energy efficiency. I'm proud to say that I have my solar panels at home, and I'm saving 10,000 pesos per month. No? Professor Wally, how do we encourage everyone, not just the big players, but everyone moving towards this transition, including energy efficiency? Household.
Yeah. It seems that all the different questions are being asked. Jay, it's unfair. But anyway, I think my thought on that is the word electricity to many Filipinos are still sort of, you should be afraid of electricity because you might die. So I think for the accelerated adoption of these technologies, household level, there must be a need to educate really the households level, and make the systems a commodity, rather consumer's commodity, rather than a technical equipment. So because people are afraid, so I think there's that barrier. So that it's not natural for people to, that's a difficult thing, I don't know that, etc. So if we really want to deploy at the household level, I think education is the first way to go about it. For example, a lot of people doesn't even know that what is bad for electricity level, for example, is that 50 volts and below are safe. That's why your batteries in your trucks are 48 volts. And a lot of systems are actually 48 volts. So, and the use of solar systems, for example, that are based on 48 volts is something that could make this happen because people will not be afraid.
Okay, and I guess to make sure that it goes down to the level of the household, we need more incentives from Congress, right? So people will put up more solar panels. No? No? Okay, no more incentives. But, in other jurisdictions, they provided incentives to the households. No? In any event, ladies and gentlemen, especially for our audience in Zoom and Facebook, thank you for attending our panel session. And thank you to our panel members. Thank you very much. I now turn it over back to our lovely MC, Karen.
Thank you, Attorney Jay, and to all our panelists and speakers for that very engaging conversation. I'd like to invite our last speaker to formally end this forum with some concluding remarks. Jay Tang is the World Bank's practice manager for the Energy and Extractive Global Practice. Jay manages the bank's energy programs in 26 countries in East Asia and the Pacific region. He has a Bachelor of Science in Electric Engineering from the Hydropower College of Wuhan University and an MBA from the University of Cambridge. Over to you, Jay.
Thank you. Good morning, ladies and gentlemen. It's a great pleasure for me to attend this POE event remotely from Singapore. I would like to express our sincere thanks to the Honorable Secretary Lotilla and our esteemed panel of experts, Ambassador Melvin, Undersecretary Guevara, Mr. Tam, Professor Mondu, and our survey moderator, Attorney Nayuga. Thanks to my fellow colleagues Fan and Raphael, and also thank you very much to those who are joining us in person today and also through the Facebook or Zoom. This has been a substantive and a very interesting discussion on the challenges and opportunities of securing a clean and affordable energy future in the Philippines through this panel discussion. It is very clear that energy transition in the Philippines will entail unprecedented expansion and transformation of the power sector infrastructure. This transformation will require a massive scaling up of renewable energy and energy efficiency to meet the rapidly growing demand, followed by phasing down of coal-fired power generation in later years. We commend the government's commitment to the substantial effort in transforming the power sector towards a renewable energy-dominated future, as illustrated in Secretary Lotilla's keynote address. As included in the World Bank analysis, to finance a just and fair transition consistent with the goal of ensuring affordable, reliable, and sustainable modern energy supply, and with the Paris Agreement on climate change, the Philippines would need to mobilize far more capital than what the currently energy plan requires. The Philippines would need support from its development partners with low-cost concession financing to overcome the barriers in affordability and high cost of capital, as well as with institutional capacity buildings to guide and manage the just transition. The concessionality of financing from developed countries can initially help scale up clean energy development and to boost the energy efficiency, and then to help phase down the use of coal for power generation. Institutional support can help establish frameworks that are needed to navigate the financing and social challenges of energy transition, and also reduce the risk and the impact of stranded assets. The World Bank has forged a strong partnership with the government of Philippines in addressing the country's multitudes of development challenges in the age of energy transition and the climate change. And our global knowledge and the experience shows that if managed properly, renewable energy plus storage can bring electricity at a cost competitive on par of coal power generation or even cheaper. It has been realized in this region and also elsewhere. As mentioned earlier by my colleague Fan Yu, we are ready to work with the Philippine government along the journey of energy transition, and we seize it as an opportunity to realize the lofty goal of attaining energy security, affordability, and sustainability all at once. Thank you very much again for your attendance to this event. Thank you.
Thank you, G, and to all our speakers, panelists, and everyone who joined us in person and online. Once again, we would like to acknowledge our partners for collaborating with us as we work towards achieving energy security for the country. We would like to thank the European Union, the Australian government, French Development Agency or AFD, and the United Kingdom for supporting our engagements in the sector. We would also like to acknowledge the Energy Sector Management Assistance Program, a multi-donor trust fund for supporting our energy transition engagement, including the analytics underpinning the PEU Energy Transition piece. Thank you all for joining our launch. To download the full report, please visit theworldbank.org/ph and follow the World Bank Philippines on Facebook for the latest development news, data, and research. We hope to see you again in our future events. Stay safe and have a good day. And lastly, may we invite again our speakers and panelists for some photo opportunity. May we invite you again on stage, please. Thank you very much. Thank you very much, everyone. We would like to invite everyone for lunch, and we'll also distribute some tokens for our